Dear investors and supporters of FHL Healthcare Fund, I hope you all are healthy and well. My name is Paul Lee, Portfolio Manager of FHL Healthcare Fund. Today, I would like to provide you with a Q2 2020 update on FHL Healthcare Fund. It has been an eventful first half of 2020, to put it mildly. When I first updated you at the end of Q1, no one would have expected such a dramatic reversal of the financial markets that happened in Q2. On the left side of this slide is the S&P 500 sector performance during Q1. On the right side, you can see the sector performance in Q2. What a huge turnaround. S&P 500 dropped 20% in Q1, led by the energy sector's 51% decline. But in Q2, S&P 500 recovered 20%, also led by the energy sector's 32% rise. Beneath the surface, you will see majority of the sectors did not fully recover its Q1 loss, but the technology sector is a standout. Healthcare sector is essentially flat for the first half of the year. Our fund performed much better than the sector benchmark. We did better in the down market in Q1, and we did better again in the up market in Q2. In Q2, growth again outperformed value by a big margin regardless of market cap, as you can see on the left. In large cap Russell top 200 index, the gap between growth and value is widest, 26.8% versus 11.4% return. On the right hand, you can see small cap slightly outperformed large cap in Q2. Russell 2000 small cap index was up 25.5%, ahead of Russell 1000 and Russell top 200. While the healthcare index lagged the broader market in Q2, our fund actually performed in line with broader market. In Q2, the fund was up 23.5%, ahead of both the healthcare benchmark and the broader Russell 3000 index. Year to date, or the first half of 2020, the fund is up 11.6%, again well ahead of the benchmark and broader market. Since its inception, our fund has net return of 57.1% after all the fees and performance allocation. We have outperformed the benchmark in 7 out of the 8 quarters during the fund's existence. I'm very pleased to see the fund performing well in both good and bad market conditions. That's a testament to our investment philosophy and disciplined long-term focused research process. What lies ahead? To be honest with you, I don't think I have a crystal ball, and I don't think anyone has. The market will continue to surprise us. However, the fundamentals of the economy and companies are relatively easier to analyze than the market movements. So my analysis will always be focused on the fundamentals. First, let's talk about the COVID-19 situation here in the US. You have heard a lot about the so-called second wave. As you can see from the chart below, we have done a much better job now in terms of testing. We're doing more than 600,000 tests per day. The bad news is that as some states start to open up, new cases are also increasing. In fact, we are now seeing more daily new cases than previous peak in April. The good news is these new cases seem to be mostly mild, and hospitalization rate is much lower than previous peak. Fatality, even though a lagging indicator, is still in a declining trend. That means this second wave is different from the first. While we have to remain cautious and continue to practice social distancing and good hygiene, I don't think we need another lockdown. I don't think anyone expects or wants a second lockdown. I think in the states where new cases are increasing, the pace of reopening will slow down, but overall business activities in the US are recovering, And I do not think the so-called second wave will put that recovery trend at risk. It's becoming increasingly evident that COVID-19 will stay with us for a while, at least until we can find an effective vaccine. Paradoxically, if the virus is very deadly, it will disappear more easily and earlier. When the virus loses its virulence, it actually gains a chance to survive longer period of time. Because virus needs a host to survive, and the virus mutates a lot. That's why SARS-CoV-2, the virus behind COVID-19, exists in many subtle different genetic forms or strains. The virulent forms have less chance to spread because of active medical and epidemiological intervention. But the less virulent form cause only mild symptoms, and patients carrying these viruses are less likely be treated medically or quarantined. That's why these mild forms have better chance to spread from person to person and survive a long period of time. We may have this kind of situation with COVID-19. More and more evidence has pointed to COVID-19 becoming less deadly, not only here in the US, but around the world. Now we know how to treat this disease better than those early days. As I said before, the virus that's spreading right now may be a less deadly form, and we have ramped up testing, quicker diagnosis, and early treatment reduce fatality. But we are far from declaring victory. The practice of social distancing may become a way of life for maybe another year. That means a lot of economic sectors will continue to be adversely affected. The long-haul air travel, international tourism, theaters, movies, and sports events, etc., won't return to normal anytime soon. Other sectors of the economy will continue to recover, but perhaps to a lower level than pre-pandemic. In this economic backdrop, healthcare sector actually stands out as having the strongest fundamentals. As you know, during the lockdown, many elective medical procedures were postponed. But now hospitals are eager to get back to normal. Elective procedures are mostly back to normal, except perhaps in the dental area. COVID-19 has little to no negative impact on biopharmaceutical industry's drug development efforts. There was some short-term logistic disruption in clinical trials, but that's mostly behind us. Clinical sites around the world are now back running normal operation. The industry's COVID-19 projects are mostly funded by government agencies, posing little financial risk to the industry. That said, I don't think COVID-19 itself will be a big profit center for the industry. I would avoid investing in COVID-19 story stocks. However, COVID-19 has catalyzed an increase in research funding around the world. This will have a long-term benefit to the life science companies, particularly companies involved in genetic sequencing technology. COVID-19 vaccine development has shown encouraging progress. More than 200 vaccine programs are ongoing around the world. At least 20 of them are in various stages of human clinical trials. There have been some published results of the early clinical trial experience. Those results have been very encouraging. All the reports claim that the vaccine produced neutralizing antibodies in humans. Some have reported the vaccine conferring viral protection in monkeys. All these give me confidence that we will have a few effective vaccines in the end. That may come as early as the end of this year or early next year. In conclusion, the worst of COVID-19 impact is over. The healthcare industry has emerged out of this even stronger. The fundamentals of this industry is very, very robust. stronger than the broader economy. I can't predict how the stock market will perform in Q3 or the rest of the year, but I'm confident about the long-term outlook of our industry. Thank you for watching. If you have any question, please do not hesitate to contact me directly. I wish you a healthy and peaceful summer.